Most of the action in the stock and CFD markets happens on your price charts. As prices go up, the chart moves higher. As prices go down, the chart moves lower. Your job as a stock or CFD trader is to look at your charts and determine when you should buy or sell that stock or CFD. This process is called conducting a technical analysis of the stock price. As you conduct your technical analysis, you are looking for trends to help you identify where prices may be going in the future, and for levels of support and resistance to help you identify where prices may stop and turn around in the future. Let's start with trends. The key to making money when trading stocks and CFDs is identifying a trend and trading with it. Trends tell you where prices will most likely be going in the future. If the trend of a stock or CFD is pointing up, you need to buy the stock or CFD to make money. If the trend of a stock or CFD is pointing down, you need to sell the stock or CFD to make money. Trends do not move straight up or straight down. They usually move in one direction for a while and then retrace part of the previous movement before turning back around and continuing on in the previous direction. Every time a stock or CFD turns around and begins moving in the opposite direction, it forms a new high or a new low. Stocks or CFDs that are trending upward form a series of higher highs and higher lows. Stocks that are trending downward form a series of lower highs and lower lows. Stocks or CFDs that are trending sideways form a series of highs that are at approximately the same price level and a series of lows that are at approximately the same price level as well. Trends can span various time frames, from short term to long term. You can even identify trends within trends. For instance, within every long-term trend, you will find multiple short-term trends. The trick is to wait until the long-term and short-term trends line up with each other. You are most likely to be successful when you see these situations and act on them. Let's now take a look at support and resistance levels. Support levels are like price floors. They are price levels where the stock price stops moving lower, turns around, and starts moving higher. Resistance levels are like price ceilings. They are price levels where the stock price stops moving higher, turns around, and starts moving lower. Support and resistance levels can form as horizontal lines or as diagonal lines that slope up or down. Trends and support and resistance levels can help you identify when a stock or CFD is likely to continue moving in the same direction or when it is likely to turn around and change directions. Learning how to identify these points will improve your trading success.